What's going on, guys? Welcome back to another video. In this video, I've got another extremely important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a fake squeeze that could potentially be coming up before this massive June 2nd date. So this is going to lead to some massive manipulation coming in the share price of AMC. And the key takeaway from this is do not sell your position. Now, nothing I say in these videos is financial advice, but if you are following along with all of the logic that we have seen with this movement so far, the key thing that you need to remember is do not let any of these small pops in the short term determine whether you want to sell your position or not. You would just be feeding into exactly what the hedge funds want you to do. Now, the second thing that we're going to be going over is some very interesting Ortex information that we have today. Now, if you guys saw my previous AMC video, we talked about this forced share recall and how it all had to do with utilization. Now, there's two theories of what I think is going on with utilization at the current time, but it's very interesting to see that right after we came out with that video about the forced share recall and everything that was going on around this utilization situation, the utilization on AMC goes from about 100% into the 20% range. So we're definitely going to have to cover that. So before we get into all of that information, if you guys would like to help and support the channel and earn 2 free stocks with Webull valued up to $1,850, make sure you check out that link down below in my description. So at the current time that I am recording today, AMC is trading at $14.14, up about 1.3%. Now, we did see a massive spike in the after hours trading period yesterday where we got up all the way into the $15 range. Now, we have been talking about, a lot of us AMC YouTubers, about this $14.50 range. So why exactly is that so important? Now, there's two reasons why I believe breaking above and staying above this $14.50 mark is super important. So the first, when we zoom out here, this right here is the last time AMC got up to this $14 around 50-cent mark, and this was back in March. This is a perfect technical resistance right here, and if we really break out and stay above these $14.50 levels, this is a technical breakout, and we could see AMC go much higher. Now, the second reason is we got to come over to the option chain for AMC. Now, when we look at this May 21st, 2021 expiration date, we can see that there's a really high open interest on these $15 strikes of about 25,322 contracts with some heavy volume today. But we also have a lot of volume and open interest on this $20 strike. Now, what I've been saying in the past is that when AMC's share price starts to climb up and get into these $14 and $15 ranges, all of these $15 strikes, these $15.50, and maybe even these $16 strikes have already been covered by the institutions who have been selling you these naked call contracts. These $20 contracts right now, I believe, are completely uncovered by the institutions, meaning that if AMC can go high enough, they're going to have to start coming out and buying enough shares in the possibility in order to cover themselves, in order to make sure that these $20 strikes do not go in the money without them covering. Now, in order for them to cover, they need to go out on the open market and buy the appropriate amount of shares in order to cover all of these contracts. So one options contract controls 100 shares. So 39,643 contracts is going to be almost 4 million shares that needs to be purchased for AMC, which could create a positive feedback loop that we have talked about and actually lead to a higher share price of AMC due to more buying pressure, pushing the stock higher and leading into that cycle. Now, when we move over to Ortex, which is going to have the most up-to-date information, the key thing that I want to look at here is going to be the utilization. So within the last couple of weeks and over the last couple of weeks, we've seen the utilization at 100%. So if you don't know what utilization is by now, essentially, it's the amount of shares that institutions are willing to lend out versus the amount of shares that have been lent out already. Now, in my previous AMC video, we were going over how these forced share recalls are most likely in effect at the current time. Now, we did go over a research report from a professor at Notre Dame, and essentially what that said is that when the utilization goes over 75%, there is a 1 in 26 chance per day that a forced recall will occur, meaning that 1 out of every 26 days, we will see a forced recall of shares. Now, what's supporting this is that we have seen the utilization go from 100% all the way down to 21.4%, meaning that all of these shares could potentially have been returned. Now, in order for this to happen, we thought that these forced share recalls were happening towards the end of last week, meaning these institutions could not find any more shares to loan out, which put them in a very interesting and not great position. Now, they do have a T+2 situation where they would actually have a day where they would actually issue this forced share recall and then a settlement period of about 2 days. Now, today would be the end of that T+2, and we are seeing the share price of AMC have a massive spike, meaning that there could have been a lot more buying volume because of this forced share recall, and we are seeing the actual utilization go down a lot. Now, there is a caveat to this utilization right now. When we come over to this Fintel data with the actual short volume over the last couple of days, it doesn't really support the utilization going down this low. We are still seeing the short volume, which would essentially mean that shares are still being loaned out at a super high rate. On the 17th, which was yesterday, the short volume was about 37.7 million. On the 14th, 63.59 million. And on the 13th, 81.583 million shares. So it doesn't really make a lot of sense that the utilization would decrease by such a significant amount, especially since we are continuously seeing a lot of short volume. I also want to talk about Citadel's new position and how they're going to plan on using this position to force a fake squeeze in order to entice some shareholders to sell before this very important June 2nd date, and go over their position in full and just explain and go over all of the massive misinformation that is going on about Citadel's position at the current time. So first, we need to go over exactly what their position is. So we can see here their first position is going to be a put. The second position, we got to scroll down a little bit further for this, but we can see their second position down here is going to be a call, and their third position is just going to be basically 725,000 shares. The thing that I want to focus on is going to be these calls and puts. Now, I've seen a lot of people come out and say that Citadel has 4.1 million call contracts, and when we come up here, we would see that Citadel would have about 5.67 million put contracts. This is essentially theoretically impossible at the current time because each options contract controls 100 shares. So this would be about 560 million shares of AMC that they would control. And then when we come down a little bit further to their call position, that would be about 410 million shares that they would control with this call position. Now, if they also owned this many amount of shares, 725,000 shares is not really that big of a position. If we look at the volume for AMC, it does 30 million within the first 10-15 minutes of trading even being open. Now, another way to actually confirm that Citadel actually doesn't own these 4.1 million put and call contracts. So when you look at this number right here, it's actually reflecting the share amount that the call contracts control. So they essentially have 41,000 call contracts, and when we come back up higher, they're going to have about 56,000 put contracts. Now, when you see the actual price, so this column is going to be the price in thousands of what this actual position represents. We can see that this is going to be about 57 million. Now, when we look over and see what the actual price of AMC was on the actual effective date on all of these 13F filings, we can see that it's trading just over $10 a share, meaning that these numbers would check out if these were the amount of shares that they held and this was the actual value of the position. So hopefully that made sense to you guys. It would be theoretically impossible for Citadel to control essentially 900 million shares of AMC because those shares don't actually exist. Now, I want to talk about what they are doing with this position. Everybody kind of knows that Citadel is in on this naked shorting situation with AMC. Now, you got to think about what Citadel is. They are a hedge fund. And what are they doing with their position right now on AMC? They are hedging it. So they are heavily weighted on the put side side, but they do have a call position as well. Now, what can they do with their share position and these put and call contracts to the share price? So with that 725,000 shares that we just talked about, they can create these artificial sell walls and make it look like there's a lot of selling pressure on AMC at a certain price and not let the price go over that point. So say the hedge funds did not want AMC to go over, let's say it's 1380 or 1385. They will put a massive sell wall out there in the level 2 data, and people will not let the price go over that amount. Now, there's a second thing that we definitely need to talk about. So on June 2nd is when the second round of voting is going to happen. I've heard a lot of people say that that's when the voting is going to end. That is not the case. June 2nd is when voting starts. So if AMC has this massive fake squeeze and we go up to these 20, 25, 40, even if we actually see a pretty strong price movement, maybe even up to $50 a share, there's going to be a lot of people, if they see a significant decline in the AMC share price, that are going to want to sell their position. Now, these are not going to be the individuals who are following along with this movement and want to hold to the very last moment, but there are new people and institutions that are involved with this movement. Now, what this would end up doing is on June 2nd, let's say right now, just use arbitrary numbers. Let's say AMC retail investors own 1 million shares. AMC then goes up to 50, comes back down to 15, a lot of people sell. So now AMC retail investors own 800,000 shares. That will be reflected in the vote, and it will look like that AMC retail investors don't actually own the actual amount of shares that they actually do. So that could de-incentivize more people from buying into AMC. This is why you are seeing on the internet that people do not want to sell before June 2nd. Now, I do think that this squeeze is going to take a long time to play out. I think we are at the beginning stages of this situation right now, and even if we saw a squeeze up to 50, these are still very low numbers for the possibility of this squeeze. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button, and if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date and on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.